Hey everyone, this is Dan with Theta Trend. Today is Wednesday, April 6, 2016. It's about 2:30 p.m. or so Mountain Time here. The market's closed a half hour ago. We are looking at a daily chart of the S&P 500 index, the SPX. The market closed the day at 2066.66. It was up 21 points or 1.05%. And so this pattern that we've been talking about the continuation and the potential to push up and above here to get maybe up to test this high around the 2080-ish level, 2080, 2085, or even to come up and test, the 2100, the potential for that to happen still exists. And certainly the market looks like it's turning a little bit sideways in here. We have a lot more of these overlapping candles and price seems to be struggling a little bit to push to new highs. But at the same time, we haven't had any significant downside violations, and we'll look at that on the shorter term timeframes as well. But for the time being, we're still sort of neutral to slightly bullish in here. I did make a fairly significant adjustment to the April 5 CIB today, and it was essentially I converted the trade. The trade as it's at was a 2 butterfly position, and we converted it to a broken wing butterfly. And we'll talk about that once we get over to looking at the position. But that's why these gray lines are considerably different than the blue expiration break-even points that we were looking at yesterday. So let's just go ahead real fast and drop down and look at the 65-minute time frame. So yesterday we were talking about this level in here, down around the 2045-ish area, and I said that the market seemed like if it was going to come down here, it sort of pushed through this level and it popped back and above. And if it found support at this level, it had the potential to come up here. And then we were going to want to pay really close attention to this area up here, right around 2055. And so what we saw today is we saw the market push up and above that 2055 level. It came right up to the 5-day simple moving average, which is this yellow line here. And from there, it pulled back, it found support, and it pushed higher later in the day after the Fed comments were released. And so this is kind of why we watch these levels, is just simply that, the market does tend to find support and resistance at these levels. And if a pattern of higher highs and higher lows is going to continue, in general, we should expect to see the market finding support at these levels and continuing on. And so that's why we dropped down to the lower time frame, the 65-minute time frame, just to look in a little more detail of what's happening and have a better idea of what we might be able to anticipate or react to in the market. Going forward, this 2045 level is going to be pretty important. It was tested yesterday, it was tested this morning, and it was tested back here on, I think this was Friday. Yeah, April 1st, Friday. So this level down here around 2045-ish or so is going to be something to watch going forward. It seems as though we've made a higher high in here again, relative to this 2028 or 2020 level, somewhere in there. But at the same time, we haven't made a higher high yet. What we're really going to want to see if the market is going to find continuation is to get back up and above that 2075-ish level. And this morning, just kind of watching the market find support in here is one of the reasons that I went ahead and made the adjustment that I did to the position, because it seems like there is the potential for continuation on the upside. And if that was to happen, we could certainly have a fast move higher as the market just kind of continues to squeeze through this move. Because the reality is when you have a swing this big, people don't expect it to continue. And so if the market does continue up and above here, it's going to tend to catch people off guard, and it's going to really squeeze the shorts who keep trying to sell into this rally and the ones who are just hanging on because they've been short from down here or something like that. So if the market does get up and above here, it could be a fast move higher up into this 2100 level. I don't know that that'll happen. I'm not predicting it's going to happen. But it's something that we need to be aware of, and we should control our risk accordingly. So we're going to hop over and take a look at the April 5 CIB here in just a second. And what I want to do before that is to just point out the adjustments that I made were somewhat aggressive. And so if you want to see more, I posted a video today. If you just go here to the Theta Trend blog, thetatrend.com, and scroll down, it's this post right here, an adjustment to widen the butterfly profit zone. It's a video post. And if you go here, there's a YouTube video, and it kind of walks through all of the different because there were a couple different adjustments that we made to the position, and we'll sort of talk through them, but if you want to see it, this is a good video to check out as well. So go ahead and close that up. So this picture here this shows the trade as of the close yesterday. So you can see here the date is 4/5, and this is what we were looking at in the risk graph when we were looking at the position yesterday. And so the market was down here, 2045.17. And coming in today, one of the things I was a little bit concerned about is just the shape of our T plus 0 line. So we have this T plus 0 line as we approach expiration because we're at 24 days to go, right? We're getting pretty close to expiration. It's starting to get relatively droopy, and it's starting to droop within the body of the butterfly. Theoretically, it should also rise relatively quickly, but there is still price risk here in the short run if the market was to move up really quickly and say it broke up and above that 2080-ish level, which was right here. We'd be underwater on this position. And so my thinking in making the adjustments today is that we had a little bit of profit in the trade, and that the potential for price risk was becoming a little bit too great, or more than I really wanted to carry, I guess you could say. As the market closed today, we talked about the market closed today at 2066.66. So in this picture from yesterday, that effectively is this price slice here. And that was that 1% move higher. So that 1% move higher, had we done nothing as of the close yesterday, would have put us in a position where the open profit was only about $50, and we're starting to slide down the curve. And so we're in a little bit of a problematic situation. What I did today is I closed out the upper butterfly, and then I went ahead and I moved down the upper leg of the lower butterfly. And again, refer back to the video on the Theta Trend site to kind of walk through this in a little bit more piecemeal fashion, but that's essentially what happens. And so the resulting position that we're in looks considerably different, and it's this. So what we have here is the market's here at 2066. Now on the upside, we have room on the T plus 0 line to move all the way up to about the 2100-ish area. This is where we're going to cross the 0 line. And on the downside, we have room to run all the way down to about 1990 or so. So if we come back to the daily chart, that's roughly where these gray lines are placed. This is right around 1990, and up here on the upside, this is around 2100. So the market can move up to there before we start getting ourselves into kind of a bad situation, and it can come all the way down here towards the 1990-ish area. My hope is that we'll be able to get out of this trade sometime, probably not this week, but sometime next week. So even if the market was to trade higher and kind of pull back into here, around the 2060-ish level, 2070, something like that, we may be able to still sneak a reasonable profit out of it. And there are some other options as well now that we're in a more protected position. But at any rate, that was kind of what I was watching when I was trying to protect the open profit. We ended the day here at 2066.66. The delta is negative 321. The gamma is negative 0.05. So really cut that down. Theta's only 1179. So we took a big hit here. The Vega's negative 32, and the open profit's it's roughly $123 or so. But if you compare that to what we were sort of expecting, which would have been an open profit in the neighborhood of maybe only $50 or so, had we traded up here. And if we were to trade higher, we'd be scrambling even more. And so that was kind of the situation that I was trying to prevent from happening. As we get closer to expiration like this, what I'm trying to do is keep the gamma under control and just keep the trade safe. I don't want to give away the profit that's built into the position, and at the same time, I kind of like to let it work a little bit longer if I can. So if we were to day step this out, what we're going to do is we're here on the 6th, April 6th. If we go forward to next Thursday or so, you can see, that we have room to move all the way up to about that 2100, 2105-ish area. On the downside, we can go all the way down to 1980. And if the market trades down and through here, we'll be in a pretty nice situation, and we could even potentially make other adjustments in there. One of the other adjustments we could make on the upside is to add another butterfly. So we could add another butterfly here at 2050, 2020, 1965, and I've just priced this out here. And if we were to do that, it would put us in a situation like that. And the main reason we might do something like this is just to increase the theta and try to sneak out of the trade a little bit quicker. Obviously, we are increasing the risk at the same time. But we had a 2 butterfly position on before, and we had on essentially that much risk anyway, so there's really not that much difference. If we were to do that and day step out to next Thursday or so, you can see here, at the current price, our open profit would be about 340. If we were up here, percent higher, it'd be about 162. We can go all the way up to 2110, and we're okay. On the downside, we can go not quite as far, around closer to like the 2000-ish level. We'll call it 2000. But if we were 3% lower at that price next week, then we'd be about 152. So there would be some sort of open profit. Now, if the market really kind of blasted up and above that 2075-ish area, and headed towards this 2080, another thing that we might say is, well, maybe the market has the potential to move higher. Whether or not you believe that to be true is entirely up to you. It doesn't really matter, but just say we were a little bit more bullish. Another thing that we could do would be potentially to sell a couple of verticals in here centered around the short strikes. So there are two different short strikes here. One is at 2015 and the other is 2020. That's why this butterfly looks a little bit rounded. But so what I did is just put in a couple of 10-point wide verticals with the short at 2015 and the long down at 2005. And if we were to do that, what that would do is it would raise the upper leg up above the expiration, or the expiration break-even point would be up and above zero. So you can see here, no matter what happens, on the upside, the trade makes about $158. And if you day step this forward out to like next Thursday again, using that, what we have is we have the T+0 line hovering up and above that upper long leg. And so we're actually getting relatively close to hitting the CIB target in here if we were to do something like this. But it's just something to consider. If we were a little bit less aggressive, maybe we would only sell one vertical, and that would put us in a position that looks like that. And again, we're essentially eliminating all upside risk if the market really does get wonky and really head higher. But it's coming at the expense of a little bit of room to move on the downside. So I thought for the time being, we would just sort of make this adjustment that we made today, or the multiple adjustments that we made today. We'll wait and see how the market plays out. If it comes up here and it comes into that 2080, 2085 level and it backs down and away from there, we should be in a relatively good position even if we don't do anything to this trade. If we just, move it forward a few days, this will continue to rise. So at any rate, this is just a defensive adjustment. If you have any questions, of course, feel free to shoot me an email, info@thetatrend.com. I hope it helps. It's a little bit different than the normal daily video, but thanks for watching.